Trade partnership accounts, and today I want us to look at a question from the past papers, April 2023, question 4. So, Muri and Kami are partnership trading under the name Murika Partnership. Muri and Kami share profits in the losses 2 to 3. So those are the things that you need to capture. So we have the profit sharing ratio 2 to 3 respectively. The following is a trial balance extracted from their books as of 31st December 2022. So you get that you see the trial balance there, balancing with a figure of 851,950. Then additional information, number 1. As at 31st December, inventory was valued at that. Depreciation is provided as follows. And accrued salaries amounted to. Then the partnership agreed for the interest on drawings, and only companies are entitled to annual salary. So the salary in note number 3, it is the salaries for staff. Then salary in note number 5 is for Kambi, one of the partners. Then you are required to prepare a statement of profit or loss and appropriation account for the year ended 31st December 2022, the partner's current account, and the statement of financial position as of 31st December 2022. So, when you want to prepare such statements, this is how you face that question. Go to additional information number 1. So you start with workings and make sure it is very clear. You correct them workings. Number 1. Number 1 is inventory. That one I'm going to work it in the statement of income. Then you can look at the reduction of doubtful debts. I want you to look at the question. You can go faster. Note number 2. So depreciation. Before you go to depreciation, can you see the provision for bad debt, doubtful debts? We have what in the 12 balance? 4,600. This is the old allowance. 4,600. The new allowance to be 1,200. So the new allowance. Then we have the reduction. We have been given the reduction, isn't it? The 1,200, isn't it?
Yeah.
Yeah, so this is our reduction. This one, we're going to treat it in other incomes. Then, you can now have depreciation. Depreciation is to be provided as follows. Buildings, it's 2.5% of the amount in the trial balance, which is the net book value. So 2.5% times the net book value, you get what? 5,500. Then for the buildings, we need also to have now the new accumulated depreciation, which is 220,000 minus 5,500. The new book value will be, so we go for the furniture now. So this is the net book value. Furniture, 84,000 times 10%, you get 8,400. Accumulated depreciation is 12,000. 12,400. Then you add now this one. You get what? Accumulated depreciation at the end of the year. So this one will go to the income statement. This one will be 800. Then another marking. So accrued salaries. So you have salaries in the trial balance, 84,000. 4,000. You add accrued 400.
Yeah.
84.
8.
This is the trade balance.
Yeah, the trade balance.
This is 400,000.
Yeah.
So it should be like this. But this one should reduce this
We reduce this
to 3 zeros, yeah. So that you get 84, 400. That is where you mess up. Then we have what else? From interest and drawings is at Muri 24,800 times 5%.
Yeah.
Kami
1,240.
This is 1 to 40.
Yeah.
Kami
17,000.
17,000 times 5%. 850. Yeah. 240. 500. Make sure these workings, you show them clearly in your answer sheet. Okay? So we are in working number 4. So interest on capital. Interest on capital, you have Glory, 90,000 times 10%. You get what? 9,000. Then you have Kami,
80,000.
times 10%.
8,000.
80,000. So here you don't waste time for calculator, isn't it? Then interest on loan. Interest on loan. We have a loan of 150,000.
Yeah.
Multiplied by percent of interest is 5%. You get 75. And then there is a story. Look at the trade balance. Do you have loan interest? So that is the one that was paid. 4,500. It means you have accrued. How much?
7,000.
No. 3,000. It's accrued. It's not paid.
Okay.
Yeah. What else is not paid? The salaries.
Yeah, the salaries wait for.
Salaries. So, or you can sum it even this way. Instead of using account, you can say total accruals, you have salaries. Accruals, you have salaries 400, isn't it?
Yeah.
400. Now, interest on loan. 3,000. Total 3,400. Isn't it? Anything accrued? Nothing else.
Yeah.
Prepayments? You don't have.
Yeah.
So note that when you are doing the accounts for a sole trader, we had so many adjustments here.
Yeah.
Okay. The examiner here doesn't want to waste your time so much on adjustments. So that is why you get minimum adjustments. And some of them are very easy to go through, to go build. Because you want, here they want you to demonstrate the knowledge of partnership accounts.
Yeah.
But also you have to demonstrate the knowledge of. Yeah, we can also calculate profit sharing, you have to calculate after you get the profit, isn't it?
Yeah.
So that is that. We're through with the workings. So from there, we can now prepare the statement of profit and loss and appropriation. So, we start with the name of the partnership. They are calling themselves Murika Partnerships. We say that when you operate a business, a partnership business, and you want to operate This name is registered with the registrar of business names, and that name is reserved specifically for you. So, Morika Partnership, statement of profit or loss. And we get either. We don't get both. Profit or loss and appropriation account. So this one should be captured like that very clearly for the account for the year ended 31st December 2022. So we start with the sales. 405,950 less cost of sales.
Yeah.
If you look at the other question for sole trader, they were examining our knowledge of this.
Yeah.
So there was adjustment here, turning backwards. Then we came to cost of sales, opening inventory in the trial balance. 54,600.
Then we have
Add purchases. 226.
226,040.
You get what? Or just do this. Less closing inventory. Then put it 12,000. We put it in brackets. Okay?
Yeah.
Then now what you get here is the cost of sales. How much? The gross profit. So you end up with a gross profit of 137. 310. Then add other incomes. You add what? Reduction in allowance for doubtful debts. Working 1,200. So you will end up with what? 128. Then you less expenses. Expenses, let's start with salaries and wages. 84,400. Working what?
It was working 3.
Budgets written off.
65.
6,500. Depreciation. Buildings. Working 2. 5,500. Furniture and fittings. 5,400. We worked it together here in working 2. We have discount allowed. 2,100. There is carriage outward. 6,100. We have interest on loan. It's working, I think, 4,500. There's no any other expense, isn't it? Add these expenses, you bring the figure here. Then you get the profits for the year. 117,500. Less this from here, you get
21,010.
21,010.
Yeah.
So, from there, we continue the other part of the appropriation. We're going to start with the profit of 21,010. That one. Net profit
21.
for the year. This is shillings thousand.
Yeah.
If you forget that, you're giving us the wrong information. So our interest on drawings. There was an interest on drawings. How much? For Muri 1,240.
Yeah.
And Kami?
We have 850.
850. You add, get 2090. Then right there, this is 0, 0, 1, 3, 2. Then invest interest on capital. Muri, 9,000. This was working what?
What?
Muri, working for, we got 9,000. And Kami,
We got 8,000.
the same working for,
Yeah.
8,000. You add them together, this is 17,000. Then salary to come in. This is analysis. Salary to come in. So you get it's 12,000. Add these two now. So that you get 29.
Yeah, 29.
29,000. That is the total appropriations. So if you less this from here, you get what? A net loss of 5,900. That is net loss for the year. Okay? Then this is our net loss for the year. You do share of loss. Share of loss. You can write SOL or POL. SOL, no, SOL, that is share of loss, or SOP, share of profit. So, share of loss, you have moving.
And can
2/5. Then Takami,
3/5.
3/5. Or 2/5 here is what? 2360. 3/5 of this. And this is 35. 40. This is in brackets. Okay? So this one and this one, if you add, it will come to what? That is the statement of profit or loss and appropriation. The second part of the question is asking us to produce the partner's current account as at
31st December.
31st December 2022. Nichore hivyo. So nitaanzia hapo particulars. Muri Kami. Particulars. Muri Kami. Then like this. Muri Kami. So we have the balance, the opening balance. Opening balance, can write it as balance brought forward or brought down. Moving 28,000, 18,000. Then we have drawings. We start with drawings. Drawings for Moody it was 24,800. Then we have the interest on drawings. Interest on drawings 1210, 1240.
1240 and 850.
850. Then interest on capital have salary to come in 12,000
Yeah.
here. So you can move. Then you have share of course, it's on this side, isn't it?
Yeah.
2360,
And 5, 4.
2360, 35, 40. That is coming. Nothing else.
Yeah, that.
We are done.
Number.
So our closing balance will be on this side. Our closing balance will be here, I believe. So for Muri, it is 8,600. And for Kami, 16,600. With a total coming to 37,000 here. And 38,000 here. Confirm your answers. Here you get 16.
610.
610.
Yeah.
So those are the balances for the two partners. Model partners. Now we need to prepare statement of financial position as at 31st December 2022. Like that. Then we have our figures are in shillings thousand. We have the buildings, non-current assets. We list them in the order of permanency. Buildings. We have costs. Accumulated depreciation. It is here. Accumulated depreciation, shillings thousand, and then this is the net book value. So our buildings are being given the book value at the beginning, 220,000. Then 55, and we have 214.
500.
Then the next item is furniture and fittings.
Yeah.
Furniture and fittings. So furniture and fittings, 8,400. Accumulated depreciation.
20,800.
And then the net book value.
We have 63,200.
63,200. Fine. So we mean you don't have any other assets. Non-current assets. Those are the only non-current assets, isn't it?
Yeah.
You add them. This one, if you make to add it, you add and close.
Yeah.
If you are not able to add it, just leave it like that. Okay. So add this, you get the total non-current assets. Then you add current assets. Current assets, you list them in the order of liquidity. Start with the inventory. So I need this figure. 277,700.
700.
Inventory, it is 12,000. Closing inventory. Accounts receivable, 94,000. 94,000. With allowance, which is 3,400. Why? 400. Why? Not 1,200 and not 4,600. The new allowance is the one that we put here. 3,400. We calculated in working one. This one you had worked them somewhere, both of them.
Yeah.
So that one you get what? 90?
And
600. Your bank
balance.
bank balance 28, 310.
Yeah.
The total current assets 130, 910. Add to the current assets, now get the total 408, 610.
Yeah.
This is it.
It's close.
Then you go to the other part of equity and liabilities. We have capital, Mori, 90,000, Candy, 80.
80,000.
It's 90, it's not 9, it's 90, and this one is 80. 90,000 and 80,000. You add, you get 170.
170,000.
Then you add what? Current. Mori,
And
8,600. Candy has 16,610. Then you add 25, 210. Non-current liabilities. You have accounts payable. Accounts payable 63,000. Accrued salaries.
they want to.
They have so you call them accruals. And you had a working. Before you go to non-current liabilities, we have loan of 150,000. So add this, you get 63, 400. Add this,